So why don't we start our Money Talk Tuesday with the Consumer Financial Protection Bureau on student loan forgiveness. It is already 12:02, and I know folks keep on trickling in. So let us just start out right now. I'll introduce myself. My name is Jessica Keegan. I'm coming to you from the Office of Economic Empowerment, and I use she, her pronouns. Okay. So first, we're just going to go through a little bit about the Office of Economic Empowerment before we let Scott give us this amazing and highly anticipated presentation. Go through some disclosures about Zoom webinars, some housekeeping onto the big, great presentation, and then we'll definitely have time for Q&A at the end. I already see some notifications on Q&A section of Zoom webinar. So please, once we go through the presentation, that's when we'll take your questions to give to Scott. So in case any other information comes up during the webinar, we won't have any redundancies. So just to dive in a little bit about the Office of Economic Empowerment, in case you have not heard about us before. So we are a department with the Office of the Treasurer and the Receiver General of Massachusetts. We are tasked with offering free and accessible financial education, promoting wage equality, and creating a bright future for children across the state. So since this is a Zoom webinar and not a Zoom meeting, we are making note that Q&As are available, but of course we are a state agency, so things are subject to public record laws. As this will be recorded, it will be uploaded onto a public website for future use, so for our YouTube channel. So that way, in case you have any friends who missed this or you wanted to circle back on any information, we will disperse that link out for you so you can reference it. Since this is a webinar and not a Zoom meeting, you will not be able to view the other participants, no camera and no chat, but we will still have the Q&A available, and then we will address those relevant questions at the end of the webinar. And we do also have a post survey at the end of the webinar, just so we can make sure that this is useful for you and we can continue in the future. So in case you like what you see here, you want to know more about our upcoming Money Talk Tuesdays and all of our other great events, you can head to the link on the screen. If you have any questions or feedback, you can feel free to email us at our Money Talk email. And if you really enjoy the financial education topics, then we can go ahead and visit myfinanciallifema.org. Okay, great. So let's turn it over to Scott.
Great, thanks, Jessica. Jessica, let me know if there's any problem with anybody seeing my slide deck there.
We can see you. I'm very excited.
Excellent, thank you so much. Good afternoon, everyone. I'm Scott Filter. I'm a senior advisor in the Office of Students and Young Consumers at the Consumer Financial Protection Bureau. I want to thank you for tuning into our presentation today on the Biden administration's recently announced broad-based student debt relief and student loan cancellation program. This webinar is intended to help you navigate the recent updates to the student loan program, to various repayment plans, and all in all student loan forgiveness. Just checking, it's having problems advancing. There we go. Let's start with the Bureau's standard disclaimer. This presentation is being made by a Consumer Financial Protection Bureau representative on behalf of the Bureau. However, it does not constitute legal interpretation, guidance, or advice of the CFPB. Any opinions or views stated by myself are my own and may not represent the Bureau's views. So let's go over the meat of our agenda today. As mentioned in our introduction, this presentation will touch on all the recent changes to the student loan program so that you'll have all the information in one spot. So accordingly, we'll talk about the continuation of the CARES Act payment pause, and we'll also talk about the PSLF limited waiver, which is still in existence for another month. Then we'll move into the main topic of the broad-based cancellation plan, And we'll touch a little bit on what's been announced for a possible new repayment plan for student loans. Before we get to that, a little bit about the CFPB. The Consumer Financial Protection Bureau is a 21st century agency that implements and enforces consumer financial law and ensures that markets for consumer financial products are fair, transparent, and competitive. In the Office of Consumer Education and the Office of Consumer Populations, we serve the general public, but we also focus on special populations, such as service members, veterans, and their families, older Americans, their families and caregivers, traditionally underserved and economically vulnerable consumers, and of course, students and young consumers, where we educate and engage students to help students navigate financial products and services to avoid student loan default or other negative financial events in their lives. So let's jump into the Biden-Harris Student Debt Relief Plan. Overall, there are 4 major parts to the administration's Student Debt Relief Plan, but some of these tenets began under the previous administration. The first element, of course, is the pause on payments and interest that began in March of 2020 and has been extended one final time and will expire at the end of this year. Second, the Department of Education implemented a temporary waiver to extend some flexibilities into receiving public service loan forgiveness and giving credit for payments that normally would not qualify for PSLF credit. Third, the administration is planning to give broad-based debt relief of either $10,000 or $20,000 if you meet certain income qualifications or whether you received a Pell Grant in your undergraduate education. And finally, the administration will propose and develop a new loan repayment option that will significantly reduce payments. For all of these programs, it does require that you have direct student loans. So if your payment had been paused during this pandemic, you likely only have direct loans and you're good to go. However, if you've had to make payments during the pandemic, you may have to consolidate your loans into direct loans to qualify for any of these programs. So the first step was the CARES Act, which is also known as the Coronavirus Aid, Relief, and Economic Security Act, was signed into law in late March of 2020 by President Trump. And that codified a plan that paused payments on federally managed student loans and also on interest accrual during this time. The exact date that the CARES Act retroactively applied it to was March 13th, 2020. So if you kept making any payments on your student loans after March 13th of 2020, and those loans were federally managed, then any payments that you made can still be refunded to you if you contact your loan servicer. If you're unsure, you should contact your lender or servicer to ask what type of loan you have and if it's federally managed and eligible for the payment and interest pause. For this period of time, even if you have not been making payments to your student loans, you will still be receiving credit towards public service loan forgiveness so long as you continue to meet the full-time employment criteria of the PSLF program. The payment and interest pause has been extended multiple times by both the Trump and Biden administrations. And in the recent announcement on broad-based debt cancellation, the Biden administration announced that the pause will be extended for one final time until the end of this calendar year. Borrowers should expect and be prepared to begin repaying student loans again in January of 2023. If you believe you'll have problems beginning repaying your student loans at the beginning of next year, we recommend that you contact your loan servicer in late November through December to go through what your options are. Your servicer can go through various repayment options that might end up with a lower monthly payment, or could put you in forbearance to temporarily delay your payments. In addition to the CARES Act benefits, the Department of Education implemented a temporary waiver which changed the rules that govern the Public Service Loan Forgiveness Program. These changes only exist for a limited time, and that waiver ends on October 31st, 2022, only a month away. The waiver allows for past payments that would not have otherwise qualified for past payments towards PSLF can now qualify for credit towards PSLF, but you must act before that deadline. Your paperwork does not need to be fully reviewed and finished by the Department of Education by that October 31st deadline, but you must have submitted to the department all the paperwork to be qualified for that opportunity. Even if you have not made or will not make 120 payments by that point, it's very important to still get evaluated for as many payments as possible by that October 31st deadline, so do not delay in submitting any paperwork for that. Under the limited waiver, any prior payment you made would count as a qualifying payment, even if you had the wrong type of loan, if you were in the wrong repayment plan, or whether that payment was not made in full or on time. The only requirement you would still have to meet for the limited waiver is that you had full-time employment for a qualifying employer. However, once you have your 120 qualifying payments, you do not have to continue working at that qualifying employer when you apply for forgiveness or at the point that you actually receive that forgiveness. And as I mentioned at the last slide, to have your case reviewed, you must act by October 31st, again, only a month away, by submitting 2 forms. One is that you need to submit a direct consolidation loan application if the loans that you currently have are not direct loans. If you only have direct loans currently, then you can skip this step and do not have to submit a consolidation loan application. The second form that you need to submit is a PSLF form for all periods of employment that you have not received credit for previously. And you can submit this information online at studentaid.gov using the PSLF help tool or through your loan servicer. On July 13th of this year, the Department of Education has also proposed some new rules for the Public Service Loan Forgiveness Program, and they're expected to publish final rules by November 1. So I want to emphasize here that the information on this slide could change based on what their final proposals are for these regulations. They are proposing new rules for the Public Service Loan Forgiveness Program that includes giving credit for payments made within 15 days of a due date, counting certain periods of forbearance and deferment towards PSLF that did not previously count, creating an appeal and reconsideration process for those who have been denied PSLF, and then automating the process where the Department of Education can obtain qualifying employment information without using the PSLF form. Again, this information could change as the department moves towards developing final rules on the PSLF program, but I wanted to provide you with some information about what they're proposing. So most recently, and this is the big meat of today's presentation that you all signed up for, in late August, the administration announced its plan for a broad-based loan cancellation that will reduce loan balances by $10,000 or $20,000 for all borrowers if they meet certain requirements. For a third of all borrowers, this could cancel their loans entirely. And this slide shows how to determine how much you might qualify for. Step 1 is to find out what type of loans you have. Again, like the limited waiver and I've mentioned previously, you only qualify for this loan forgiveness if you have direct loans. So if you have FFEL loans, you do need to consolidate those through a direct consolidation loan application to move on to the next step. Step 2 is to determine if you meet the income qualifications. And this can be a little confusing, and you'll have to look at your tax documents from 2020 or 2021 to determine your eligibility. And we'll go into exactly what to look for in the next couple slides. If you're a current student, however, trying to qualify for loan cancellation, to determine your income qualifications, you will have to look at your parents' taxes to determine if you're eligible. Step 3, after you determine the income qualifications, you would determine if you've received a Pell Grant at any point that you've been enrolled as an undergraduate student. Regardless of whether you're a parent borrower or a student borrower, this requirement goes to whether you received a Pell Grant when you were enrolled in college. So for parents who've been out of school for a while, we are talking about going significantly back. So you may not remember if you received a Pell Grant for any of the semesters you were enrolled. And if you're unsure, you can always log into an account at studentaid.gov, and that will give you information about whether you qualified for the Pell Grant. Borrowers who received a Pell Grant while an undergraduate and met all of the other qualifications here will receive up to $20,000 in loan cancellation. But if you did not receive a Pell Grant, but meet all the other requirements, you can still receive up to $10,000 in loan cancellation. Before we do a deeper dive on the qualifications, what do you need to do to get broad-based debt relief? Now, again, as we've said, if you've made payments during the payment pause, you can request that money back by contacting your loan servicer. The Department of Education has said that it will take an average of 4 to 6 weeks from the point they receive an application to provide the cancellation under this program. We recommend that you apply as early as possible, but no later than mid-November to get relief before the payment pause ends and payments resume in January 2023. You can apply beyond that point, and you will be able to apply into 2023, but it does mean that you might go back into repayment before you receive loan cancellation. If you have non-direct, excuse me, non-federally managed loans, then again, you will need to submit a direct consolidation loan with your loan servicer or the Department of Education at studentaid.gov, and then fill out the application after it's released in October. Now let's go back to the income qualification that we mentioned. When you're looking at the taxes, you want to look at two specific items. The first is what filing status was used when filing those taxes. And the second is what is the adjusted gross income. So if the tax filing status was single or married filing separately, then you would look to see if the adjusted gross income is $125,000 or under. If the filing was head of household or married filing jointly, then the amount you're looking for adjusted gross income is $250,000 or less. Remember that if you miss this qualification threshold by even $1, you will not qualify for any of this broad-based loan forgiveness. So again, after you've determined that you're eligible for the qualifications under income, then again, we check to double check that you have the Pell Grant. And if you received a Pell Grant for any semester you were enrolled, then you would get the $20,000. But if you did not, you would have the $10,000. Remember, again, if you're unsure if you had Pell Grant, that you can check in the studentaid.gov account, and it will tell you if you've had a Pell Grant in the past. And we should note here that loan cancellation is capped at the amount of your outstanding debt. So if you owe less than the $10,000, what will end up happening is just a cancellation of your debt. You will not receive any type of refund up to that full amount of $10,000. Now, for a large number of you, you will not need to do anything because the Department of Education already has the information they need to determine your eligibility through either an income recertification of an income-driven repayment plan, or you may have recently submitted a FAFSA. However, if they do not have the information, you may still need to submit an application and some tax information to the Department of Education. The application should be available in the middle of October, and you can sign up to be notified when that becomes available by going to the subscription page at the Department of Education's website. And here, that website is www.ed.gov/subscriptions or www.ed.gov/subscriptions. And then on the subscriptions page, you would simply put in your email address and check the box that says new federal student loan borrower updates. Then scroll to the bottom of that page where you'll also have to check the box to accept the data policies of the Department of Education and submit that form. Once you submit that form, then you'll receive an email notification when that application is ready, online, and able to be submitted. Now, to address some longer-term issues about the affordability of repaying student loans, the administration has announced some proposals for a new student loan repayment plan. The full proposal of the new repayment plan has not been published yet, but announcements indicate that the department will propose a repayment plan that limits monthly payments to no more than 5% of their discretionary income. And to put that in perspective, currently, based on the type of repayment plan you have now, if you're in an income-based repayment plan, that current limit is between 10 and 20% of your discretionary income, depending on which plan you're enrolled in. Additionally, they'll propose to protect income at 225% of the federal poverty level. And currently that amount is at 150% of the federal poverty level. And to kind of put it in an actual perspective for you, what that means is that anybody who makes $15 minimum wage or less will have a $0 repayment on their student loan if they're in this new repayment program. Also in this repayment program, for balances of $12,000 or less, those will be forgiven after 10 years. And currently, in the other repayment plans that are income-based, individuals tend to see forgiveness after 20 or 25 years, unless they're specifically using like the PSLF program or a teacher forgiveness program. And then another important aspect of this is that the department will cover any unpaid monthly interest rather than capitalizing it with a principal and increasing the amount owed. So that's a big part here too, where you won't see your balance grow from month to month or year to year, because the department will pay any interest that you're unable to pay based on what repayment schedule you are on. Now, if you're a current student, again, do you qualify for some of the loan cancellation? And that answer is yes. If you're a current student, you can qualify for some cancellation. But again, that's a little bit more confusing and nuanced than the straightforward information we've given so far. So again, you check your income eligibility based to your parents' income and not your own. And then additionally, to determine if you're getting the 20,000 versus 10,000, that Pell Grant then comes back to you, and whether while you're enrolled, you have the Pell Grant. The important new aspect here is that this is not eligible for the upcoming school year. So for you to get qualified for loan forgiveness and cancellation, that loan had to have been dispersed to your account by June 30th of 2022. So we're really talking here about loans from last year or before that point. Excuse me. So what happens after you apply? So after you submit your application, you should start looking for communications from your loan servicer after about 4 to 6 weeks. Most likely this will come in the form of an email communication that you'll have to log into your loan servicer's account to read. Any forgiveness that you receive is non-taxable for federal tax purposes, so there's nothing to claim on your federal taxes. For a handful of states, though, your forgiveness may be taxable. A few states are looking into passing legislation to change their state tax laws to rectify this taxation of forgiveness, but not all states will. When you file your state taxes after receiving loan forgiveness, you'll want to check with your state's treasury office just to make sure that you're following state laws on tax liabilities for student loan forgiveness. Also remember here that if you owe less than $10,000 or $20,000, then you'll only see the amount that you owe canceled. You will not receive any type of refund for the amount between what you owed and the full amount that you could have received under this broad-based cancellation. Also, if you still owe more money than the amount that's canceled, you should still be prepared to resume repayments in January. After your cancellation is applied, your payment will be adjusted, though, to account for the amount that was forgiven. Now, if you can't afford to go into repayment, I just want to reiterate that you should contact your loan servicer. They can go through your options and discuss with you and help evaluate what best choice there is for you. That could be starting a new income-driven repayment plan, or that could be going back into forbearance, which is still an option if those lower payments are still too much for you to make at this time. Now, if you can afford to pay back your loans, then look for communications in late November through December about your payments restarting. Now, remember, even if your loan payment was lowered because of this cancellation, you can continue to pay your old amount and pay off your loan at a faster pace than normal and pay off your loan early. And that is the essential part of the Biden administration's loan repayment plan. Before I turn it back over to Jessica for question and answer, I wanted to thank you all for participating today, and I hope you found this information useful and the upcoming Q&A useful. I also encourage you to join the Office of Students mailing list, which is at the bottom of this slide. And by signing up, you would be notified of additional activities by my office, such as webinars and presentations such as these as part of our outreach strategy, as well as any publications that we publish that focus on issues related to students or young consumers. And with that, I will turn it back over to Jessica.
Great. Thank you so much for that presentation, Scott. We do have a lot of questions, but a lot of them have already been answered by your presentation. Like, for example, a lot of people asked about if this would be taxed, which you answered. So we do have a lot of questions. And I wanted to start.
Since you brought up the state tax, I do just want to say, I believe the state of Massachusetts, I'm assuming we have a lot of Massachusetts people on here, that Massachusetts is not taxed at the state level. But there are about 6 or 7 states that currently have either laws up in the air or are currently taxing them. So I just want to, if you have out-of-state people here, that's important.
Thank you so much for clarifying on that front. I figured we could start very early with a question on what is a direct loan versus other types of loans like an FFEL or a Parent Plus, and if those apply, just because we have a lot of common questions on that front.
Sure. So when we talk about direct loans or FFEL loans, we're basically talking about different types of government loans and where they get their funding from. So if you have a direct loan, that means your loans are most likely more recent. It's a newer program that the federal government has done where the Department of Education is technically your lender. And therefore, you would end up making payments either to the Department of Education or to one of several recognized loan servicers. A FFEL loan is a loan that comes further back, and it was actually, the program was curtailed in the Obama administration. So if you haven't been to school in the Obama administration, there's a 99% chance you have direct loans. But that loan funding came through a bank. So at some point, you may have been making payments back to Citibank or to SunTrust or a bank like that. But they're still kind of basically the student loans. A plus loan or a subsidized loan or an unsubsidized loan could be either direct or FFEL. Those programs all existed in both types of programs. So really the definition comes down to, do you have a recent student loan or a not recent student loan? The easiest way you could be able to tell is over the last 2 years during the pandemic, did you have to make a student loan payment? If you did not, it's more likely than not you have a direct loan. If you did have to make a payment, it most likely means that you have a FFEL loan because those loans were not qualified in under the pause under the CARES Act. To be 100% certain though, if you call your loan servicer or your lender, they can tell you, or if you log into that same site, studentaid.gov, to find out whether you qualified for a Pell Grant, that will also tell you what type of loan you have.
Thank you so much for answering that. And to follow up, we have a few questions asking that if you received a Pell Grant, is your refund dependent on the amount of the Pell Grant, as well as if you received a Pell Grant for something like undergraduate, would that qualify for your graduate loans? Those are 2 questions about the Pell Grant.
All good questions. So the only determination on Pell Grant is that you just received one. It does not matter if that Pell Grant was for the minimum, which is usually around $400, or for whatever maximum there was the year that you went. So as long as you had it at one point during your undergraduate career. Now, I will say that it does require that that Pell Grant was applied to your account. So there are circumstances where you might have seen it on an award letter, and then through a process called verification, you may have made too much money and ultimately didn't qualify for that Pell Grant. It doesn't happen often, but I can tell you it happened to me once in my undergraduate career. So if something like that happened, you would not qualify for the additional amount. So what you want to do is just double check that it was applied to your account. Studentaid.gov will tell you that. It does not matter the amount. If you have a situation where you really don't have any undergraduate loans anymore, but you're still wanting the loan cancellation on your graduate loans, that can still happen. You could still receive $20,000. It just determines whether or not you had that Pell Grant during undergrad or not. So for instance, if we think about parents in this situation, parents a lot of times aren't, they're not paying on their own loans, they're paying on loans they took out for students. But for them to receive the $20,000, we would still look at a parent's undergraduate account to determine if they had Pell Grants while they were in undergrad. And that would be how you would determine the $20,000 or $10,000 versus that for a parent.
Scott, I don't know if you're reading my mind or just reading the chat, because we had a lot of parents asking that question. We've also had a lot of folks similarly who are now graduated from college but are paying off their loans. They are working individually, and they're asking if since when they were in undergrad or in graduate, their loans were dependent on their parents' income, but now they have their own income. Will that parent income from when they originally took out the loans qualify for this, or would it be their own income at the moment?
The only time that a parent's income would be used to determine a student's loan forgiveness would be if that student is still enrolled in school. If they have entered into the realm of repayment, then we would no longer be looking at their parents' information. We would then turn and look at their tax information, even if it's that first year out of college. So you know, someone who's just graduating, most likely not making $125,000 yet, filing single, so they would probably qualify under that. And then, of course, if they're an adult, like a parent, we obviously then would not go back to look at the grandparents' taxes. We would solely be looking at theirs. So the only time we look at a parent's taxes for the case of the student is if they're still enrolled in school and not in repayment.
Great, thank you so much for that clarification. To move on from that specifically, we have a lot of folks saying that while they had their loans paused during the break, they did repay their loans, and they are asking about if they are able to ask for a refund on those, or what should they do if they've paid off their student debt during the pause?
Sure. If they made payments during the loan and they did not have to because of the pause, they can certainly get their money back from their loan servicer. You just have to call your loan servicer and ask for it, and they will basically send it back the electronic means that that individual did it. My hesitation here is just you would only really want to do that if the loan cancellation coming would cancel off your entire loan, right? Like if you paid your loan down to say $8,000 and you know there's about to be 10,000 coming, then you obviously try to bring it back up to 10,000 to get that cancellation. That makes sense. What you don't want to do is if you owe 60,000, you paid it down to say 55,000, and then you're going to get a 10,000 loan here. You're still going to owe 45,000. So you may not want to ask for your $10,000 back, only to then have to start repayment on it in January and then be taxed on it as well, or have the interest start accruing on it when you've already made such progress to lower the principal amount that you owe.
Great, thank you, Scott. And is there a deadline to do?
There is not a deadline to ask for that money back at this point. With loans going back into repayment in January, I would encourage you to do it by that point. While they have not announced it yet, it does not mean that at some point there won't be a stop period where you would have to stop asking for it. Other deadlines, again, I would just want to note is that you'll want to submit an application for the broad-based loan cancellation by mid-November so that it's processed before you have to go into repayment in January. And then if you are taking advantage of the PSLF limited waiver, that deadline is October 31st.
Great, thank you so much for that clarification. Does that PSLF waiver work for people who are still in their grace period on loans?
That's a good question. That is unfortunately the one point that the PSLF limited waiver does not work. Technically, you have to be out of your grace period. Now, I'll note here that a grace period is different than the payment pause. So a grace period is a regulatory and statutorily defined period of 6 months after you've stopped attending school. So if you graduate in say May, it's 6 months from that May date. If you just haven't gone into repayment but have gone beyond that 6 months, a portion of that should count under the PSLF limited waiver, because then we're really talking about the payment pause and not a grace period.
Okay, thank you so much. And is that the same for loans in deferment?
Under that is not that, well, that's not the same as deferment. For certain types of deferment, they are giving credit back for the PSLF limited waiver. So if you're meeting the employment requirements of the PSLF program, submit the documentation by October 31st so that they can review it, and then they'll give you the maximum number of credit that they can based on what they've previously given you and what your particular situation is.
Thank you, Scott. And you're taking this very well. I know we're rapid fire hitting you, so if there's any points you'd like to bring up, definitely interrupt and feel free to do that. I just wanted to clarify, since there seems to be a lot of confusion about the different topics that we're speaking of. Some folks are asking, do I have to be working for a nonprofit to get that $20,000? Do I have to just be having the Pell Grant? Do I qualify for the $10,000? Do I have to be working for a nonprofit? There just seems to be a bit of a blurred line, if you'd be able to reiterate that point.
There definitely is a lot going on in the world of student loans, and it is all very confusing and bleeds together. So I completely understand that. I don't know if my screen still shows, but I will go up to the beginning of my presentation.
It does. Thank you.
So you can see these are the, as we talked about, the four main points that we have. So for the first one, that pause, the only thing you have to have is a direct loan. There's no other qualifications. Your loan should have stopped. You could have still made payments if you wanted to, but all you had to have is direct loans. The second one, the PSLF temporary waiver, or the public service loan forgiveness in general, that requires a certain type of employment for a nonprofit or government entity to qualify for. And this is a program that's been around for quite some time. We did a previous presentation through these Money Talk Tuesdays on that. So if you want more information on that program, I encourage you to go back and look through that. But that does require certain types of employment. But if you're talking about the 10,000 or 20,000, which is the newest of everything we're doing for student loans, which is the broad-based debt relief here, all you have to have is a low salary, which is under that 125 or 250,000 requirement, and whether you had a Pell Grant or not. So there's no income, or sorry, there's no employment requirement for the broad-based cancellation.
Great. Thank you for clarifying on that. I know it is a lot of different information, so just having this slide up will hopefully cause a lot of clarification going on. Moving forward, we have a lot of folks asking for if they're married, if they file jointly, if they both have loans, say, for example, they don't qualify for the Pell Grant, do they get $10,000 of relief each, or would that be $10,000 in total?
So if they're married and filing together, and they both have their own separate loans, they both can qualify for some amount of broad-based loan forgiveness. In that case, they'd be using the same tax return, so it has to be under $250,000. And then they would look at each one individually for their Pell. So if spouse A makes, or if they both make, say, $200,000, spouse A had a Pell Grant, that person would get $20,000 in loan forgiveness. But if spouse B, same tax returns of $200,000, does not receive Pell, then they would only get $10,000 of loan forgiveness. So it would be separate and individualized based on that. The other thing to consider is if they were filing separately, then say spouse A, for instance, could have made $150,000 with a Pell Grant, but then would not qualify because they're above the income threshold. Whereas spouse B would make, say, $50,000, which would have added to that $150,000 to make their original $200,000, did not have Pell, so they would still qualify for their $10,000.
Okay, thank you for clarifying on that front. Just another general question that keeps coming up, probably lost. Do folks need to apply for this broad-based relief? And if so, how do they do that? Just to circle back on things you've spoken of, that's something that keeps coming up.
Again, that answer is you may or you may not. If you've done something recently where you have submitted some sort of tax information or income information to the Department of Education, which would either be if you filled out a FAFSA recently, or you recertified your student loan repayment plan recently, then there's nothing else you would need to do to get that broad-based cancellation. However, if you have not done one of those things, or you just want to be on the safe side, which I completely understand, then you do have to submit an application. That application is not yet available, but will be in the middle of October. To make sure that you get that, if you go to www.ed.gov/subscriptions, which is on this slide here, and simply submit your email address and check the box next to the one that says new federal student loan borrower updates. Scroll down, hit submit after also clicking the box to accept the data policy of the Department of Education. Then you can just sit back and wait for them to email you when it's available, and then they'll send you the link once it's up and ready to be submitted.
So thank you for that clarification. On the same vein, something we have discussed, but is still getting a little lost, is folks from that first bracket who have paid off a lot of their loans during the pause. If they paid off their loans before the pandemic, do they qualify for asking for that refund?
That's a good question. So yeah, the answer to that is unfortunately no. If you paid off all of your loans, there will be no refund of any kind for this broad-based loan forgiveness. In a similar way that if you also had less than the $10,000, the maximum that you'll have forgiven is the amount that you actually still owe on your student loans. And they won't refund or send you any extra money based on this program.
Right. And from the same vein, a lot of people are anxious to know when they would get this relief from the broad-based debt problem.
Yeah, if you don't have to submit an application, ideally you'll hear by the end of the year. Department of Education has said it'll take them 4 to 6 weeks to do it once they release that application. So nothing will happen before the application goes out. So you'd want to check with your loan servicer. If you do submit the application, then it's going to be about 4 to 6 weeks from whenever you submit that application.
Great, thank you. Now we have a lot of repeat questions, so let me just go ahead and search through and see if there are any other new ones. A lot are asking about criteria for forms, but I think you mentioned that we don't have that form yet, so it's hard to tell there. Okay, for recently recertified income information, for example, for like those FAFSAs, how recently are we talking about? When does this income information have to be relevant to in these people's lives?
The announcement that has been made from the Department of Education is that they would be looking at whether you've submitted tax information for 2020 or 2021.
Okay, thank you. We do also have more specific questions about folks who had a Pell Grant and paid off their debt and then returned to school and then accumulated more debt. Would that second round of debt, even if they didn't have that Pell Grant or they had paid everything off beforehand, are they still eligible for these programs?
Yeah, as long as they currently have debt of some kind, that's a direct loan. And as long as it's not for the upcoming school year, they can still qualify for this loan, even if they've paid off previous loans and even had a period of time where they had no student loans. So they could still qualify for the full $20,000 if they had a Pell Grant and have, for instance, graduate loans now.
Okay, thank you for that clarification. We have some people asking if they should still apply for the public service loan forgiveness, even if their loan might be canceled through the broad-based debt relief.
You know, if they're going to have their loan fully forgiven under the broad-based cancellation, then they don't necessarily have to continue with the applications for the PSLF loan, just because they know that their amount will be fully canceled and there'll be less paperwork and stress for them. So not necessarily having to move forward. If they have more than what will be canceled though, then there's definitely the recommendation that they still continue on with the PSLF program. And what they'll see is they'll see a portion canceled now for the broad-based forgiveness program. And then once they complete all of the work for the PSLF program, they'll see the remainder of their loans forgiven at that point. So it is possible to kind of double dip for both of these programs and get credit for both if you have more than the $10,000 or $20,000 in current debt.
Okay, thank you. And our colleagues over at the Attorney General's office are also having a similar presentation, and a lot of folks are asking if the information from that is still something that applies here. So let me just bring up some of the questions that have caused some confusions. So if you have been paying loans for under 10 years under PSLF, they say that, oh, for this, they'll qualify for the public service loan forgiveness. Is this temporary? That's part of a limited waiver for that paying back, or is that permanent? And I can clarify that if you'd like.
Yeah, would you clarify that question a little bit?
Sure. So if you're paying back loans for 10 years under public service loan forgiveness, even if not all of the loans are 10 years old, say for some are 5 years old,
Okay.
will they all be forgiven once you qualify for PSLF? Is this temporary for part of this limited waiver, or is that permanent for PSLF, or excuse me, for public service loan forgiveness?
Okay, thank you. Now that clarification helped a lot in understanding the question. Under the traditional PSLF rules, before we even start talking about the limited waiver, if you had some loans that were qualified for PSLF and some that weren't, and you consolidated them so that they could all then qualify for PSLF, you actually lost all the credit that you had received up to that point on those loans that had received some credit. And then you would start fresh at zero, moving forward with the new combined loans. The PSLF limited waiver allowed that if you consolidated during that point and then submitted the PSLF form, that when you combine those loans, they would then give you credit for the loans that had the most credit and apply it to all of your loans in that consolidation loan. So it's definitely one of the benefits of doing it during the limited waiver is that you get more credit. When that limited waiver ends, we will go back to the previous way where if you combine your loans afterwards, you will lose credit on any loans that you had credit on going towards the future. There may be some new regulations on those PSLF regulations that I mentioned earlier that address that, but I have not fully seen those regulations to tell you what those might end up as. So what I'm telling you now might also change in the future, but as we stand now, when we go back to the original regulations and you were to consolidate loans that had some credit and some that had no credit, you would lose all credit again. So it's important that you submit consolidation forms and PSLF forms by October 31st, so that doesn't happen.
Okay, thank you. Also on the public service loan forgiveness, folks are asking about if they've had past employers who qualify or if they have current employers who qualify. How far back can one apply based off of their employers?
Oh, that's a great question. That answers October 1st, 2007. And that is the first date of the PSLF program in its implementation. So you can't get credit for PSLF before PSLF existed. But any point after that point, you can submit for your employment to be qualified. It does not have to be consecutive. So you could do 2 years here and then take a break and then come back and do the rest of it. So you definitely can do it in the spurts that you worked for the correct employers. Just know that nothing before that October 2007 date would qualify just because that's before the program.
Okay, that makes sense. Thank you. Some people are asking about the employer verification letters for qualifications. Is that the only form of qualification that you would need, or is there an alternative to the employer verification letters for PSLF?
It's not necessarily employer verification means this is someone who's a little bit older in the program. They've changed the name of that form to PSLF form. So if you hear me say PSLF form, but you think of the old employer verification form, those are the same forms now. And generally that's the main form where someone will just sign off on your employment to attest that you work full-time for a qualifying employer. If you have any problems with that being signed or trying to get proof from that employer that you worked at, if you go on to the PSLF help tool on the Department of Education's website, which again is studentaid.gov, as you start to fill it out there, you'll be prompt saying that you're having problems getting that information from your employer. And then the Department of Education will follow up with you and try to get some sort of other information to prove your employment status. So they may ask for things such as previous pay stubs from that employer or W-2, something that can help verify that you worked for an employer that did qualify under the definition, even if you can't get that information from the employer themselves.
Had to unmute there. Great, thank you so much. We also have had a couple people ask also in regards to public service loan forgiveness about the full-time qualifications, about how many hours does full-time count if it's say 30 hours, or is it dependent on the organization?
So that's an or question. Full-time employment is 30 hours or your employer's definition of full-time employment. So if they have a different definition, you can use their definition. If it's 30, they should sign off on the form, it's 30. And I will say that if you have a part-time job, or if you have multiple part-time jobs and they're all qualifying employers, if your hours work to be 30 hours a week or more, you can receive credit for having multiple qualifying part-time employers. You just have to include them both on the PSLF form.
Great, and just to elaborate on that, would you be able to give some examples on occupations that do qualify for PSLF? For example, do non-for-profits also qualify you for PSLF?
So that's a good question. A qualifying employer for PSLF is solely tied at this point to the tax status of the employer. So it's not so much career. So it's not like I'm a teacher, because you could teach either in a nonprofit school or a for-profit school. It's specifically whether that employer is nonprofit or a government entity. So when we talk about government entities, we're talking federal government, state government, local government, tribal government, any type of military service, Peace Corps or AmeriCorps volunteering, or if your employer is a 501c3 organization recognized by the IRS. So if you had meet those qualifications, then you would count for that. If, for instance, so I work in higher education and there is such a thing as a for-profit college. So if I work for a for-profit college, just like the University of Phoenix, I would not qualify for PSLF compared to if I worked for the University of Massachusetts, Boston, solely because that's government nonprofit versus for-profit, and it's all tied to the employer.
Okay, great. Thank you so much. Let me just look through some of our questions as we're getting a lot of repeats. For example, we're getting a lot of repeat questions about if loans in default also qualify, if you'd be willing to just readdress that for the folks who are asking while I find us a more specific question.
Yeah, if they're talking specifically about PSLF, then they'll definitely want to take advantage of the limited waiver to get credit for that. If they're talking about the broad-based loan forgiveness, they should still receive credit for that. And the Department of Education, and it's kind of outside the purview of this information, has released some information about what they're going to do with currently defaulted loans as we come out of repayment. So I encourage anybody who's in that situation to look at the Department of Education's website on student loan defaults and things that might be changing for them as we end the payment pause from the CARES Act.
Great, awesome, thank you. I know that we're rounding out of around 5 more minutes left. Is there anything right now, Scott, that you would like to address or reiterate from the commonalities that these questions have brought up while I keep looking for the folks that are asking questions?
Yeah, I would just, I guess, reiterate all of the upcoming deadlines, and there's so many more of them now than when I used to do this roadshow and it was just the one. Just be aware, loans will go back into repayment starting January 1st. If you want to take advantage of the PSLF limited waiver, you have to submit your applications for that by October 31st, which is only a month away. That month will go by extremely fast. Know that at the middle of October, the application for the broad-based forgiveness cancellation will be available, so you can sign up to have that submitted. If you submit it by November 15th, you should have it canceled before your loans go into repayment, so you won't have to deal with making a payment and then having your payments changed based on how much was canceled.
Thank you for talking about those deadlines, especially with so many different programs and things going on. It's always important to have those. We have another question about public service loan forgiveness. If somebody's qualifying organization is no longer in business or dissolved, does that mean they still can qualify and can add that to their public service loan forgiveness?
Yeah, if they had the IRS tax exempt number, they should still be able to do that. Again, if they have someone who can attest from the organization their employment, they should still submit the PSLF form. If they're in a situation where they no longer have access to someone who can attest to that, then as you're doing the form on the PSLF help tool, you'll just simply indicate that to the Department of Education, and the Department of Education will reach back out to you.
Great, thank you. And if you are somebody who works for one of these qualifying employers for less than 10 years, can you still apply to PSLF, and is there a benefit to doing so?
You should definitely still take advantage of the PSLF limited waiver if there are periods that you have not received credit for, as it's important to just get as much credit from that waiver as you can, and that waiver will end. If you are not going to receive any credit from the waiver, or you have not hit the 120 payments, you might as well wait until you hit that 120 payments to apply. They won't give you credit for less than 120 qualifying payments towards PSLF. But if there are periods at all that you would qualify because you had the employment but not one of the other factors, definitely do that while you can during the PSLF limited waiver, even if you won't hit 120, because it will still help reduce the number you have to get to reach 120.
Great. And we have folks asking, if you are using public service loan forgiveness, we've spoken about credit a lot. How do you know if you've received that credit?
If you submitted the paperwork to your loan servicer, that means at this point you should have either been transferred to Fed Loan Servicing or MOHELA as your student loan lender. You should call them and they can tell you exactly how many payments you have. I can't speak to MOHELA, but I can speak that if for some reason you're still with Fed Loan Servicing and not have transferred yet to MOHELA, if you go onto your online account, they have a very convenient tracker that will tell you specifically how many months you've received credit for and how many they think you could receive credit for based on the number of payments you've had. So it's very easy to find right on the front page of their app or their website when you log in. I assume MOHELA will develop something similar if they don't already have that up.
Okay, great. Well, I know we are at 12:58, and I know that a lot of questions have slowed. So I just wanted to thank everybody for coming, and thank you, Scott, so much for presenting here. We really do appreciate it. So many people have given their thanks, and also kudos to your ears in the background. Wanted to let you know. I'm going to make sure that my information is relevant in the chat, our Money Talk address. Definitely feel free to reach out to the Office of Economic Empowerment if you have questions. I know Scott mentioned his contact information earlier, but thank you everybody for coming. And Scott, is there anything you would like to say to close out and end this session?
Just if you have questions, feel free to reach out. There are resources available. We do recommend you talk to your loan servicer first, just because they have your actual information in front of them and can give you direct guidance for your situation. If you have any problems dealing with them, please feel free to reach out to us. The Office of Students email is on this page, or you can always submit a complaint to the CFPB through the Loan Ombudsman or the FSA Ombudsman group there. And any type of problem that you have with your loan servicer, we're there to help. Great.
Thank you so much for all of this information. I have learned a lot personally, and I know that a lot of folks here have. We'll let you go take a nice break, Scott, and everybody else. Thank you for joining our lunch hour Money Talk Tuesday. We hope to see you at more in the future, and please make sure to try and answer the exit survey. Thank you, Scott, and thank you everybody for coming.
Thank you.
Thank you all.